Welcome back. It's week one and it's vanilla equity portfolio simulation time. We invested in 3 portfolios 1 week ago and now we have the first follow-up. So for those that don't know, Vanilla Equity is a new platform. It's a gateway for the aspiring portfolio manager and it's a new concept. I think it hasn't been done before. There's a lot of prop trading companies that try to get individuals to trade and they fund their trading. Vanilla Equity is a little bit different. In this case, we're trying to get people to incorporate and then become portfolio management companies, and we offer them to invest our portfolios. So just to get a picture of what it could be like, we have now 3 simulations. And if you haven't seen the first video, just a quick recap. We're investing in plain vanilla stocks, hence the name. We're looking at 10 companies, large cap, known companies. And if you don't know any details about them, which I think everyone knows a little bit about them, but if you want to know more, I find that if you don't have access to Bloomberg or any type of official source, you can just go to MSN, and their webpage is actually pretty good. So there you can see a lot of details on both the financials, but also people investing them, and you can find out more what's really behind the companies. But in this case, we're not really interested in the companies themselves. We're really just investing now and we're basing our investment decisions on the stock price and the stock price movement. And this is a weekly thing, so this is just to make it easy for ourselves. We're looking at the closing price on the weekend, and then this fictive portfolio simulation that we're doing, we're placing every week and then the new trades. So we started off with 50,000. We have 3 portfolios, 3 different strategies, and we're going to do dollar cost averaging, which means that we're investing 10,000 the first 5 weeks, and from there on, 2 of those strategies you stay fully invested, and the last one you don't. So the first strategy is very simple: buy and hold. Something a lot of people are unable to do, especially if you're following the financial markets. You don't always have the discipline to do that. So we're doing it. The past week was quite raw on the markets, so actually all our holdings decreased in value. For the buy and hold portfolio, it doesn't really mean anything. It just means that we're really thankful that we did this dollar cost averaging, and it's actually now cheaper to buy than what it was last week. And the trend is downward, so perhaps we're going to get cheaper and cheaper every week. We'll see. But that portfolio, I'm really happy that we didn't put 50,000 immediately. Now at least we have an average purchase price that's a little bit better. Now the second strategy we had is what we call let the profits run, where we're not touching the profitable stocks. And now when we talk about profitable, we're talking about the ones that have gained during that week. So in the past week, actually none of the stocks gained. So basically we would sell everything. And then we would inject another 10,000 today to buy the same holdings. So we can basically leave it untouched. So this is a very weird situation actually, that none of the stocks were profitable. I think this is because nowadays there's a lot of ETFs, a lot of index investing, and the markets tend to move together because so much money is in funds. So when a fund has to trade, they trade multiple stocks, and multiple stocks move even though it's not necessarily a single company that has been affected that much. But just because everything else moves, a single company will move as well. Now, the third strategy was to buy the dip, very popular here the past years. Here we're buying 50% more when a stock goes down. So in this case, all the stocks went down. So we're gonna buy half of those positions again. We increase the position, and then we inject as well the extra 10,000 for this week. So after this, we have invested then 2/5 of the 50,000. Except for this last portfolio, of course, here we're investing a little bit more. So we'll see, depending on how the market goes, if we can actually invest more or not. Might be that we're fully invested before we reach 5 weeks, might not be. So the idea with this is to show you a little bit the concept of how we work with vanilla equity, and we work in quarters. So it's not a bi-monthly payout, not a monthly payout, not a weekly payout. We actually look at quarters. So as we started on the 17th of September, we're now looking at the fourth quarter. So if you would have joined vanilla equity at that time, you will be investing and you have time until the end of the year. So you have October, November, December. That's the fourth quarter. We want to give people time because the markets fluctuate. And I think if you always put a week or a month as a deadline, people start to do irrational choices. So when you do investments, I like to think in the long term. I think you should too. And given a quarter, that's quite a long time. So I think you have a chance to succeed, a more realistic chance, because the market's going waves. And if you have a quarter time, then I think that's sufficient. So after this last quarter, we're going to see how much profit we made. And so we have certain rules. You will split the profit. So in the beginning of January, we'll look, okay, the starting point was 50,000. If you went up to 60,000, you will get 5,000. If you get up only to, let's see, 51,000, so you have a 1,000 gain, you will not get that. The house always takes the minimum of 1,000. If the value of the portfolio goes down, it's no problem, unless it goes more than 10%. So immediately when the portfolio value goes down 10%, that's when it's canceled. So you need to have a little bit of risk management in place to ensure that that doesn't happen. But you can sort of be unprofitable for multiple quarters. It's no problem at all. And it's quite natural that you're not always profitable. It's not that easy to do this. But hopefully you can find a strategy that works for you. I hope you already have that. And then you can apply it. So these portfolio simulations, I try to follow them up on an Excel dashboard. And this is something I'm quite new to. I've used very primitive versions, and I'm happy to share with you. And I'm happy to receive any type of ideas and comments on how to improve it. And maybe you're using something similar. I think it's a good tool. If you have the newest versions of Excel, you have this stock functionality that didn't exist when I started investing 20 years ago. So back then, it was much more complicated to get the stock information into Excel. Now it's very simple. You can do the same also with Google Sheets. It's which way you prefer. But I think it's a good idea to have some kind of portfolio tracking system that you can follow. Personally, I try to use one where I can see the holding periods, and that's basically because of the tax reasons. So I know what is a long-term investment, what is not, when can I buy, when can I sell. And then I look for percentages that move a certain amount so that I can quickly see if something has happened. You can, of course, also do this online. So even on MSN, like I mentioned before, they have this possibility to create your own list. You probably can get alerts there as well. And you don't necessarily have to go and get a Bloomberg subscription to have this functionality. And the idea was with vanilla equity is to keep everything quite simple, because what happens easily is that you have an idea, you want to execute it, but then you get distracted. And I think it's very similar to shopping for real estate, that if you're looking for a home and you discuss with your spouse what type of home you're looking for, one wants a garden, one wants it, conveniently located next to a school, and you start to look for it. And then when you start looking for it, even if you look online or if you go to an agency, suddenly a lot of options start to pop up. And you will see ads for something that's, well, you get one more room if you go a little bit further away. If you add a little bit to your budget, you get this. And it might be very distracting. So the same thing happens with trading, that once you want to start to take it seriously and you think that, okay, I'm going to start investing now properly, let me get some kind of trading station, and you get a license for whatever, maybe even, there's a lot of internet brokers have really nice software, but they have a lot of functionalities. And I don't want you to get distracted by the functionalities. So yes, you can do FX swaps on it, but maybe it's not the time for that yet. So I think it's better to master something very basic. And that's what I try to do here with vanilla equity, to make it easy, have kind of strict rules, and not take unnecessary risks. I do think it's a good idea to have two portfolios. So you have one where you can take your risks, you can play around. Especially if you're like me, I like to follow the financial markets. So there's a lot of impulses coming all the time. Okay, buy this, sell this. Oh, I should probably do this. But I don't want to touch my long-term investments. So then I have another portfolio where I can do the impulsive purchases and sales, and maybe for less amounts, less transaction costs, but I keep that separate. And also having this portfolio follow-up that we're going to have now every week, I hope it teaches a little bit of discipline, because you can't rush this. You just have to wait 1 week. Okay, let's look at the price. And I think a little bit, that's how you take away the emotions as well. And if you can find a strategy where you have this discipline, I think you will be successful. So no matter what your strategy is, as long as you keep at it, it will probably pay off in the end. So this is how the portfolio looks right now. We're off to a tough start, but then again, this might be a great opportunity to actually pick up stocks. Like I mentioned, these are completely fictive holdings, so this is no real money is placed here. This is for pleasure and fun to do this, and we're going to see how it works. We're not taking into account anything, any press releases, any news, anything that these companies are doing. We're basically relying on it. The companies are functioning well, they're big enough, and now we're just going with the market. And I think it's going to be fun to follow which strategy will work, which won't. Let's see what happens. So if you want to know more about vanilla equity, you can go to vanillaequity.com. Of course, you can DM me as well. We're on all the relevant social platforms. And stay tuned. And if nothing else, then I'll see you in 1 week.